What is up, guys, and welcome to another edition of the Market Marauder Show. Being the market, one trade at a time. Hope everybody's having a great week out there, able to lock in some profits. All right, on today's episode, going to be talking about cryptocurrency in 2024, some of the trends that I see going on, as well as some of my predictions of what's going to be going on in the market in 2024. All right, so first, I want to go over what the current climate of the cryptocurrency market is. These are real-time values based on the recording. So depending on when you see this video, the prices will change. We have Bitcoin around $69,756.44. Ethereum around $3,694. We have Tether at 99 cents, BNB at 673, Solana at 161.54. We also have XRP at 501. Scrolling down here, we have Doge at 14 cents, Cardano at 44 cents, and then Shiba Inu at 0.000002345. So those are some of the top popular cryptocurrencies out there. Bitcoin hit its high probably around 3 or 4 weeks ago, surpassing 70K per Bitcoin, which definitely was impressive overall. Its market cap has continued to grow, so Bitcoin definitely being the leader. But there are some things that I want to talk about. First being institutional adoption. So institutional adoption, cryptocurrency, once considered a fringe asset class, has now entered a mainstream financial area. Institutional players, attracted by the potential for substantial returns and diversification benefits, have taken to keen interest of this emerging asset class. So in 2020, institutional investors poured over 29 billion into cryptocurrency, according to data from CoinShare, making a significant increase in the previous years. Grayscale Investments, a digital asset management firm, reported a record-breaking inflow of 5.7 billion into its cryptocurrency investment products in the fourth quarter of 2020 alone. Another example of major institution flux is the UAE. According to Chain Analysis, the UAE has seen an incredible influx of institutional interest, surpassing its neighbors. And since June of 2022, over 35 billion in cryptocurrency value flowed into Emirates. Chain Analysis reveals that institutional investments, each extending 1 million, took a lead, constituting over 67% of crypto transactions in Emirates from July of 2022 to June of 23. Professional investments, so that's between $10,000 to $1 million, closely followed, showcasing the growing interest of seasoned players. Meanwhile, retail investments made up 4.63% of transactions, highlighting the diverse crypto community. So there are some key reasons behind all of this, one being legitimacy and credibility. This is the reasons for people's participation, mainly retail and institutions. You have market maturation, you have increased liquidity, diversification, and also hedging strategies. And so these are some key things to factor in, is why more people are getting involved into the crypto space. You also have impacts of institutional adoption. So there's some regulatory scrutiny. So there's still some things that need to be passed as far as, the SEC and the financial institutions here in the U.S. Some other countries are doing it faster than the U.S. is. It's kind of been a slow grind for kind of laws in place to protect investors. Going and seeing the things that happen with FTX, a lot of people losing their money, losing assets because there's not a thing like FDIC insurance with banks that can protect your crypto assets. So a lot of people got kind of wiped out from FTX and its old situation. You have innovations in finance, mainstream accessibility, and Bitcoin status. So Bitcoin definitely plays a big factor. Usually when Bitcoin goes up, more people kind of keep their eyes onto cryptocurrency as a whole, and Bitcoin, once it goes up, kind of lifts the rest of the market. So you see a lot of meme coins like Shiba Inu and Dogecoin start to go up, as well as some of the other big players like Cardano and Ethereum start to go up with more regulatory things going on in the market, as well as seeing more people have adoption for those coins and those asset groups. Another thing I want to talk about on here is the adoption from institutionals being Grayscale. So Grayscale has been really big in adoption for their cryptocurrency products, and they kind of market them on their website. So some of the crypto products that are available that you may not have known of are Grayscale or GBAT, which is their ticker sign, which is Grayscale Basic Attention Token Trust. You have Grayscale Bitcoin Cash Trust. You have Grayscale Chainlink Trust, Grayscale Decentralized Trust, Grayscale Decentralized Finance Fund or DeFi Fund. You have Digital Large Cap Fund, Grayscale Ethereum Classic Trust, Ethereum Trust, Filecoin, Horizon, Litecoin, LivePeer. And then you have one that's private placement. You have Solana, Zcash, and Stellar. So those are some of the main ones to look at. One of my favorite tokens is Stellar. I like how Stellar moves overall, kind of its basis for what they plan on doing with Stellar. I like the project as a whole, and I think it can grow from where it currently is at. Bitcoin being one of the main ones, and Ethereum being kind of number two, the gold and silver. People look at Bitcoin as the gold asset, and Ethereum as the silver asset. But I think there are some kind of key takeaways from these other DeFi or decentralized projects that are out here. Now, next, I want to talk about some more regulations as far as other countries and how they're adopting it. So, this is from the World Economic Forum. Governments around the world are building out new rules for cryptocurrencies. The International Organizations of Securities Commissions has also laid out its 18 recommendations for global rules on managing crypto and digital assets. And the World Economic Forum's pathway to the regulation of crypto assets detailed key regulatory developments over the past few years. The forum is actively working on digital asset regulatory, or DAR, if you've ever seen DAR before, that acronym, initiative, which analyzes outcomes of different national approaches to digital asset regulation. So down here, there's a chart talking about where countries are for their adoption. So you have Hong Kong, Japan, Europe, and the Emirates. Kind of where they're at in regulation wise is initiated a license and registration regime for major crypto assets intermediaries such as crypto exchanges and custodians. Then you also have this next section, which is deliberated fiat-backed stablecoin regulation, especially with respect to defining reserve requirements as well as clarity in recommendations. So that's Europe as well as the U.S. You have mandated or are in the process of mandating regulations on AML/KYC being coordinated by a way of FATF's travel rule. And this is India as well as Hong Kong and some of Europe. Then you have reflected on the most appropriate way to ensure consumer and investor protection through restricting access or occurring firms to implement positive friction, mandating disclosure, and increasing oversight for institutional participants. You have Hong Kong on here as well as UAE. And then you have developed guidance and or approval regimes for marketing and promotion of crypto assets. So this kind of outlines and encompasses all the things that need to be done currently by the U.S. You see the U.S. is only in two of these categories. So there are more things and other countries that are way further ahead. You have Hong Kong on most of these, but developing guidance and approval. You have Canada, you have South Africa, and then you have the UK and France. And then lastly, you have conducted consultants on decentralized activities such as DeFi and DAOs. So the US has worked on that, France, the European Union, and the UAE. So there are strides governmentally being moved forward on trying to regulate, some of the things going on in cryptocurrency, but it is a large issue, meaning it affects multiple countries. So it does take a lot of time. There are some countries like UAE, which is further ahead in some of those regulations, but Having people like, or having organizations like the World Economic Forum talking about it is definitely a starter place. Some countries are looking to see how other countries regulate it, seeing those models work out in real time, and then going to implement rules and regulations of their own. And bear in mind, some of these countries' current financials are not the same. So, other countries, their GDP and finances maybe need a new revamping, which they're more gung ho to go and implement these cryptocurrency regulations, where others are kind of fine with their current currency and how it's working, and are trying to find ways that they can benefit between incorporating new forms of currency or new asset classes to help implement commerce and trade between them and other countries. So it's definitely a multifaceted approach to trying to get all of these countries aligned. And I do like the fact that World Economic Forum is really active in trying to find the regulation and find the right ways, thinking of all the different ways to prevent something such as the FTX from happening again, and especially if it happens on a national level, meaning a country's currency is dependent on it. You want to already have those plans and those developments in place to help save or help revamp the economy if it starts to go downhill from the adoption of cryptocurrency. So next, we're going to talk about DeFi and kind of what DeFi is and what's going on with the DeFi world and some projections for 2024. So if you don't know what DeFi is, DeFi stands for Decentralized Finance, or DeFi for short. It marks a revolutionary stride in financial technology, utilizing secure, distributed ledgers akin to underprinting cryptocurrencies. The innovation heralds a new era where third parties and centralized institutions are bypassed, allowing direct peer-to-peer, or you may hear people say P2P, financial transactions. This fundamental shift is powered by blockchain technology, which significantly diminishes the need for traditional financial intermediaries such as banks. Blockchains revolve or role is pivotal, acting as a distributed and secure database where transactions are encrypted and stored across multiple blocks. This structure ensures that once a transaction is recorded, its detail become immutable, reinforcing the security and trust in the system. DeFi's allure extends to its offerings and accessibility, low fees, high interest rates, security, transparency, and autonomy. These features collectively foster an inclusive financial environment that contains sharply and conventional banking standards. At its core, DeFi's operational mode are smart contracts, and the Ethereum blockchain facilitates automated, secure financial transactions without central oversight. So basically, once you make that transaction, you can get it immediately. There's no 3 to 5 business days of you having it, since it all resides on a blockchain. The ecosystem supports a variety of applications, including decentralized exchanges or DEX, leading or lending protocols, derivative protocols, and aggregators. These applications are pivotal to enhancing direct transactions and enabling complex financial products through compostability, showcasing potential synergies with traditional financial industries. Uh, Ethereum's pivotal role as the foundation of most DeFi protocols underscored significance with the demand for Ethereum and Ether scaling with the DeFi sector growth. So you may have seen a lot of people say Ethereum is more valuable than Bitcoin. Bitcoin really is kind of like its own store of value, when Ethereum, being the silver in correlation to the gold, really has a lot of things built on it. So I know when I got back into NFTs way back when, a lot of them were built on Ethereum. So you had when you traded Bitcoin, sometimes you could buy them for ETH. ETH was mainly the best way to get NFTs. So you had Ethereum, but you had to go to different ways to convert it. So I think what I ended up doing was using like Coinbase. I think I had a MetaMask wallet, but it was a lot of conversion, and you were taxed multiple different ways to do it by certain exchanges. Some exchanges taxed, some exchanges didn't. Or you can go through the way of just mining Ethereum, or mining Bitcoin yourself, and then you use what you have stored in your wallet to make those transactions. Ultimately, there are a couple of big projects that are out there. The number one, and I agree with this list as well, is Uniswap. Uniswap uh, stands as a towering figure in decentralized finance landscape, re-owned for its innovative approach to decentralized exchanges or DEX. It is not just the largest DEX by trading volume and total value locked or TVL, but also a hub for liquidity, hosting pools, made pairs of tokens, operating on Ethereum, and extending its reach to 10 other chains. Uniswap's versatility is unmatched. So Uniswap is definitely the one I've used the most, in my personal opinion, for getting some DeFi coins. Um, I think, you know, way back when seeing Uniswap, really come to market, it was very interesting to see the adoption of Uniswap. But there's not really any DeFi project that exists that's not on Uniswap. So Uniswap kind of is the hub, I would say, where some of the new DeFi projects that were out there, you would see them on Twitter, which is now X, and they would come to market, and then they would have to go through like their background. They would have regulatory approval or approval on the way that they would operate. Their white papers would go out, people would read them, and then they would go onto Uniswap, and then people would be able to buy and sell them. Also having pairs, and I think staking as well is another great thing that Uniswap does. So having me personally use Uniswap, I can attest to Uniswap being the first one. So next is Lido. I do not have personal experience with Lido, or ticker sign LDO, has emerged as a titan with the DeFi crypto space, particularly noted for its pioneering approach to liquid staking, with an impressive over 30 billion worth of ETH locked. Lido Effect offers a compelling proposition for Ether stakeholders. Its utility spans major networks such as Ethereum and Polygon, making a versatile platform for diverse DeFi activities. So, some key features of Lido is you have liquid staking protocols. Users can make their tokens and immediately start earning rewards, receiving liquid um, ST tokens in return, or basically stake tokens in return. This innovative mechanism allows for continued liquidity as even as assets are staked. So basically, you can use them if you have them staked. Lido DAO, the governance heart of Lido, where stakeholders can participate in decision-making process regarding upgrades and protocol parameters. This ensures a democratized approach to the evolution. Lido's approach to staking, characterized by its semi-custodial service, distributes users' tokens across multiple validator nodes, enhancing security and minimizing risk. So I haven't personally used Lido. I do know Polygon is growing. Polygon was also like a big second one. I know it was adopted on a lot of the NFT markets. So before, when I got into NFTs, it was just Ethereum, and then I did see a large adoption for Polygon. Now Polygon was a little bit faster, in my personal opinion, than doing Ethereum transactions, just because the gas fees were ridiculous for some of the NFTs, and the gas fees kind of took me out of some of the NFTs. When going to try to buy them, the gas fees were just crazy, especially after having to convert some of the USDC over that I had to Ethereum, and then getting charged with that fee on Coinbase. So you know um, definitely, I mean, it's up to you on what you do with it. But I think, if it works for you. Staking is a big option for some people. Some people get crypto just to stake. Some people actually mine and then stake what they've mined, which is kind of, very interesting. But they're all different ways to really approach cryptocurrency. The third one we have on here is Aave, so ticker sign AAVE, emerges as a standout in the DeFi crypto realm, especially for those with keen grasp of decentralized finance, intricacies, and risk. Positioned on Ethereum network, Aave introduces a non-custodial lending and borrowing platform that extends its services across 8 different networks, highlighting its ability and broad appeal. And so on here, some key takeaways from or innovations that Aave has over other competitors are flash loans. So Aave's Pioneer service offers uncollateralized loans that must be repaid within the same transaction block, catering to financially sophisticated users. A token, so lender receives these as proof of deposit, which accrue interest in real time, enhancing the liquidity and utility of assets within the platform. Then you have interest rate options. Borrowers can choose between stable and variable interest rates, providing flexibility in loan management amidst market volatility. Next, we have Eigenlayer. So, Eigenlayer is revolutionizing the Ethereum blockchain by introducing a novel concept known as restaking. The innovation allows developers to leverage Ethereum's decentralized validator set and staked Ether or ETH, paving the way for creating new applications that benefit from Ethereum's robust security infrastructure. And then some things about restaking is developers and restakers can contribute staked Ether or Ethereum liquid staking tokens or LSTs to ecosystem, enhancing Ethereum security. Those who stake their ETH directly on the beacon chain can create eigenpods, specialized nodes that support the network security efficiency. And so, Eigenlayer innovation or innovative approach to restaking and commitment to enhancing Ethereum security protocol position is a significant player in DeFi's crypto space, ready to contribute to the scalability and safety of layer 2 solutions. Next, we have MakerDAO. So, established by Rune Kristen, MakerDAO is just another name for DeFi crypto list. It represents the cornerstone of decentralized finance ecosystem within or with its foundation deeply rooted in billions in U.S. Treasury and on-chain assets. MakerDAO has carved out a niche, generating impressive annual revenue nearing $250 million. And so the in-game overhaul and sub DAOs, the in-game proposal aims to rejuvenate MakerDAO's image, introducing 6 sub DAOs designed to cater to various sectors within DeFi, including beginner-friendly platforms, technology, real-world assets, finance, and institutions. These sub DAOs are set to offer enriching opportunities for yield farmers and savers through the earnings of new Gov tokens and new stables, positioning MakerDAO akin to central bank dictating monetary policy. And then also here's some AI governance and some future plans for MakerDAO. You have ambitious visions, including transitioning into fully autonomous DAO, utilizing artificial intelligence for governance. This AI governance model will be anchored around the Atlas, a central repository for all data rules and procedures, ensuring a seamless and efficient governance process. Despite facing criticism from community from the in-game proposal, MakerDAO's commitment to innovation and its comprehensive suite products like Earn Yield, fund management, and OTC crypto exchange underscores the pivotal role in shaping the future of DeFi. So ultimately, there are a lot of DeFi projects that are out there. Definitely go look at some of them. I think DeFi is going to be one of the key topics that are going to be talked about in 2024. Like I said, when Uniswap came out originally, which is the first one on here, it definitely, kind of took over as far as DeFi. Every time I heard a DeFi project, it was like the goal of the DeFi project was to be on Uniswap because of the versatility and how many members it has overall, and how many tokens that are actually residing on it in projects that use Uniswap. So lastly on here, I want to talk about NFTs in the Metaverse. I think that's another thing that's going to ramp back up in 2024. NFTs were huge in 2020, 2021. There was Bored Ape kind of was like the number one, in my personal opinion. Fight me. But I think Bored Ape was the number one overall. There were a lot of other NFT projects that kind of took off during the NFT market. But then you heard Metaverse kind of come out. Metaverse was one of those things that people talked about, didn't really understand. But when companies like Facebook changed their name to Meta and Mark Zuckerberg started talking about Meta, the metaverse, then I think people really got invested into understanding or trying to figure out what the metaverse meant to them. So, um, going on here, talking about what is metaverse NFT. So the term NFT basically is a non-fungible token. Refers to a unique, incorruptible token that's permanently recorded on the blockchain and thus irreplaceable, which made those Bored Ape NFTs, which was one of ones, basically irreplaceable because you had one person who bought them for a certain price and they can sell them for whatever price they want, but it's kind of whoever wants to sell it for the most. That's how it goes. They increased in value over time, making them such an important asset in the NFT marketplace. The token itself is a proof of ownership regarding a digital asset. It comes in the form of ranging from digital works of art to virtual real estate. In general, the metaverse or metaverses um, in parallel is a hold on. In general, the metaverse or metaverse is a parallel, connected, and digital universe that enables us to interact with each other or a virtual environment in a realistic way. As for NFTs, they refer to digital tokens that represent ownership of assets in this digital universe. And so, if you've seen like Sandbox, for instance, you can buy NFTs to outfit your character, different weapons. You can buy properties in Sandbox and some of the other uh, metaverses like Decentraland. Is another one you can buy property in Decentraland, and there were a lot of celebrities and companies buying digital land essentially in these metaverses. And so, whether it's land in the virtual world, custom avatar, or work of art, even a digital experience, anything can be tokenized and owned as an NFT in the metaverse. Overall, NFTs transcend the boundaries of digital reality. They can be bought, sold, exchanged, or even moved between different metaverses, and thus offer a new form of freedom of and ownership in digital world. Metaverse NFTs are at the heart of the convergence between virtual reality, blockchain, and digital economy. So the question really comes: should you invest into the metaverse? I can't tell you whether to or not to invest into the metaverse, but there are some interesting things that are on the horizon. So, anticipation for the future of the metaverse is the next big leap into the digital world. Investing in a metaverse NFT is investing in the vision of the future. So, people bought the Bored Ape NFTs because they thought it was an investment in the future, and it still can be looked at as an investment in the future. I don't think the value of those are going to go down at all. Maybe the intrinsic value, meaning people aren't really talking about it, but I think for those people who bought them at the time they bought them, they imply that they were had intrinsic value, and so they've changed hands multiple times. I'm pretty sure between people, but I don't think the NFT world is over. I know NFTs kind of been incorporated in a lot of different ways. I think there are a couple of sports places. I don't know if it's the Dallas Mavericks or one sports team that I saw where you could buy an NFT for a ticket. So basically, you bought the ticket, it was a one on one. But if you sold that ticket, you got a portion of the proceeds. But I think that no, I think the team itself got a portion of the proceeds from that sale of the NFT because the ticket was an NFT. So I know when I got into buying and selling NFTs, you can put a royalty on it. So like the NFTs that I made, if I sold an NFT, then I could get a 10% royalty every time that it's sold. So essentially, if I sold it for one ETH, I got a 10% royalty of that. So I got a portion of ETH. And then so forth and so on. As the asset is sold, you get more and more money, meaning residual income from the sale of that purchase. So if I sold it for one ETH, I get 10% of that transaction. And then if they sold it for four ETH, I got 10% of that transaction, so forth and so on. So it helps to have an asset that grows in value and you still getting residuals off of it. But I think NFTs looking at the core of it being a non-fungible token, I think that technology is still needed, whether it's for parts of, different equipment, whether it's, concert tickets or vehicles or real estate in the real world. I think NFTs are kind of here to stay. Their potential profit gain, so the metaverse's high demand on limited supply is likely to lead to appreciation, giving you a shot at impressive financial returns. I would actually agree with that. I know looking to buy some land in Decentraland and also in the sandbox, some of the prices of the land that was bought, it showed how much people paid for it. Like they bought it for like 1 ETH or 2 ETH and were selling it for like 13 to 14 ETH. And people were buying it. But, with it being such a rare asset token, because there wasn't going to be any more metaverse land in a specific plot in Decentraland as well as the sandbox, it went for so much. And other companies were starting to buy land around it. So it made the price of a lot of those plots go up significantly. So personalization and creativity, Metaverse NFT enables unprecedented personalization and creativity in the digital space. When your own NFT, you have complete control over the digital asset, and then supporting a digital ecosystem by investing in Metaverse NFTs. You support the artists, developers, and visionaries who are working to build these digital worlds. So, what type of NFT metaverses are out there? You have virtual land. So, this is basically what type of asset classes are out there for NFT metaverse products. So, you have virtual lands, real estate, avatars and characters, virtual items, and virtual experiences. So, like on here, it says online courses, concerts, and games. Those are things you can get. Virtual items, you have artwork, vehicles, things you can use that could be tokenized. You have characters, so like different characters and avatars that you can buy in like Decentraland as well as Sandbox, real estate, um, and virtual land itself. And then here's some of the best 2024 NFT metaverses. You have a Game of Skill metaverse NFTs. You have Tamadoge Metaverse NFT, and I remember, seeing this, getting real big, in Shiba Inu. This was definitely one that I had look forward to. You have Cavalier Metaverse NFT, excuse me. You have Fight Out Metaverse NFT, Bored Ape Yacht Club Metaverse NFT, Real Estate Investment Club Metaverse NFT. You have CryptoPunks. CryptoPunks was also a really big one. Kind of the two that were the biggest were CryptoPunks, and then you had Bored Ape Yacht Club. So I think Bored Ape Yacht Club was more popular than CryptoPunks, but CryptoPunks definitely took off. You have Axe Infinity Metaverse NFT, the Sandbox, which I talked about earlier. You have Decentraland, which I talked about earlier as well. And then you have places to buy, which is OpenSea. OpenSea actually allows you to make your own NFTs, so you can make your own NFTs and sell those NFTs on the actual open marketplace, which I think is really nice. You have Binance NFTs, Rarible. Rarible, I would say, is the number one in my personal opinion. I've used Rarible in the past. That's where I originally started selling NFTs. I had NFTs that were out in the market, and I linked my Rarible account to my OpenSea account. So when it got posted on Rarible, then it automatically went to OpenSea. So I do have direct, experience using Rarible. But on Rarible, I used ETH or Ethereum. I didn't use Flow or Tezo. And Ethereum, like I said, buying NFTs, you just have to bear in mind the gas fee for some of those. And you have Super Rare, which I haven't used personally, but I know they have a lot of good products on Super Rare. So ultimately, I think that the crypto market is going to continue to grow. I think you're going to see more DeFi products going out there. You may see a ramp up of NFTs and more Metaverse plays coming out there, especially if more corporate entities get involved into NFTs. But I think the big thing that we're going to see is more regulatory adoption of the coins themselves or the ecosystems themselves, such as Grayscale. So Grayscale, with all of the different investment options that they have, really getting Wall Street adoption or institutional investment adoption into the crypto space, I think is something that we'll definitely see. That'll probably be the number one thing I'm looking for in 2024 is more institutional adoption, such as Grayscale, and getting those regulatory things passed so that more Grayscale products and more companies like Grayscale can have those products to market to further diversify your portfolios overall. So drop a comment down below. Tell me which cryptocurrency as well as what DeFi and what NFT project do you think will do the best in 2024. And I'll see you guys on the next one. Peace.